now that everyone can watch us and see us. Kristin, please introduce yourself.
Hello, everyone. I'm so excited to be here. My name is Kristin Bell, and I wear a lot of hats. So my full-time role is I'm the program manager at Hub 101, which is Cal Lutheran's co-working space and startup incubator. Program manager meaning it's my job to create programs that support entrepreneurs. So we have an accelerator program. It's 14 weeks. We have an ongoing incubator program. We have a pitch deck program, pitch feedback program, excuse me. And then I have my equivalent of side hustles, I guess. So I run deal flow for a group of angel investors in Santa Barbara called Santa Barbara Angel Alliance. I've been doing that for about 7 years. So deeply ingrained in the angel investing space. This is Milo. He gets jealous whenever I talk to anyone on the computer. And then I mentor. So I mentor through Harvard Business School. I mentor through a program in Saudi Arabia. I mentor in a variety of different capacities. So I'm really passionate about tech startups in particular. I don't do as much with small and medium-sized businesses, but I do love them as well. But my wheelhouse is really tech. So, and then I teach. Part of what was on Gary's LinkedIn image and stuff was executive MBA and MBA program. So I teach any type of innovation and entrepreneurship course. My MBA is an enterprise innovation entrepreneurship. It's a lot of words, but the entrepreneurship side, and then how do you do that within a large organization? I could talk a lot about that. I come from an insurance background when I lived in London, but I don't want to go too in the weeds. I would love to hear what y'all are working on, what problems you're having, what challenges you're having. If you have a win, if you want feedback on anything, I'd love to be able to provide my insight.
Amazing. You're got so many cool background experiences and areas of expertise to share with everyone and give people support. So everyone that's been joining us right now on the stream, I want you all to know that the text chat is where you ask the questions. So post what your questions are. I will relay them to Kristin and get you answers, feedback, insights, advice, whatever you need. If you're not sure what to ask, you can simply share what you're struggling with, or what you're challenged with, or what you might be afraid of. Because, building a career, building a business, these things come with a lot of different, concerns and fears. So everyone has them. Don't be shy, and it's going to help everyone get, insights from whatever you're sharing. Kristin, do you have something to say?
Yeah, I was just going to say, I could talk about startups all day. So until there's a question in the chat, I'm happy to just talk. And maybe it would be helpful to also kind of lay some groundwork of like where my expertise lies. So my background is actually marketing. So I was the global head of marketing for an accelerator in London. And that's where I fell into the world of startups. And I was like, this sets me on fire. I love this. And that was an insurance technology accelerator. So we were working with 28 of the largest insurance companies who wanted to kind of play in innovation. This is in the 20 teens. So think about the banks being disrupted by like Venmos and PayPals and the neobanks. Insurance was looking at that and saying, what's that going to look like for us? And so it was a really exciting time to be in insurance, which is kind of funny to say. Insurance, there's really cool stuff going on in there too. But so I fell in love with startups. I fell in love with the accelerator model. I fell in love with innovation. And my wheelhouse since then, so that was about 10 years ago, has been all across tech, mostly early stage, though what I do through Harvard Business School is more growth stage. So if you're an early stage company, if you just have an idea, we do a lot with just ideas. If you're fundraising and you want to know how to approach angel investors, I have a whole shtick there. If you're stuck with customer acquisition, if you're stuck with product market fit, I'm obsessed with product market fit because it's the number one reason why startups fail, is building something that might solve a problem, and that's cool, but it's not good enough. You have to do so in such a way that the market's willing to pay. It's been my obsession for years now, is helping startups achieve that. So want me to keep going, Gary? I don't want this to be like a diatribe of Kristin.
No, yeah, I get it. Don't worry. Like I'm a billion times worse because it's it's so easy to get excited and passionate about all these different things that you want to help people with and where you can help. And yeah, I need to stop myself right now. So so we had a couple people like asking questions in the community earlier about co-founders, and I loved your take on this because it's something that we see people struggle with all the time, and often they're rushing, right? Because they don't recognize that it's a long-term relationship, a serious relationship. And also they kind of misunderstand what a co-founder is, right? Sometimes they're just looking for free labor. And they kind of also, even if they're not trying to like come at it from that angle, they're being a little bit more like naive, and they're just thinking that someone else is going to match them in regards to their effort and passion for their idea when they come on board as a co-founder. And what comes with that is also this expectation that this person is going to dedicate as much time and effort into the project, the venture. So, what kind of advice do you have for people seeking a co-founder and the risks involved in that, and what you've seen to really help people foster the right relationship and treat that co-founder the right way?
Gosh, I've seen this play out so many times in so many different ways. I have been a mediator in founder splits. I have been and founder discussions. So I've seen it all. So things from completely toxic founder relationships that the only way through was to dissolve the company and basically start again. Just the one I'm working with currently is a couple founders who 50-50%, both women founders. And one of them just isn't really interested in it as much, even though they say that they are. And so, kind of the going to your point, not really. And the interesting thing there is they both founded it together. So you'd think that they have an inherent desire to keep the motivation, to keep the momentum going, right? Um, but in this one particular instance, one is just not really into it anymore. And so, anyways, my biggest piece of advice is, and I'm sure you all have heard this before, like it's like a marriage, right? Like it's truly you're building a business together. Um, Seek help, seek mentorship, bring someone else into this conversation. So again, a lot of what I do is mediate between co-founders once they get to the point where they're having trouble. And so if you could anticipate that beforehand, that'd be my biggest piece of advice. So really vetting the person, spending a lot of time with them, giving them project work if they're not a co-founder from day one. There's a really interesting book. I recommend it. It's very small, very fast read. It's called The Equity Split Pocketbook. Gary, I'll have to look it up in a minute. But the cool thing in it is it provides like this Excel sheet that it links to. And you can kind of, especially if someone doesn't join you on day one. If you join from day one, it's a little bit different, right? But if someone is coming in as a co-founder, and whether they should be a co-founder or an early hire, independent contractor, employee, whatever, this kind of helps frame that conversation with each person. So what experience are you bringing? Do you have a successful exit before? And it kind of weights these different things and kind of spits out what your equity percentage might be as a starting point for the conversation. So I'd recommend resources like that. And I'd also recommend just talking to mentors and listening to your gut. If something doesn't feel right, you're usually right.
Yeah, it's so
So there's
important.
a lot that I could talk about with founders, but it really is a really long relationship. And I've seen this where another example, I think they spent 3 months kind of working together, that everything was going well. So they did the whole co-founder agreement thing. The main founder gave up a significant portion in order to be a 33% across three founders, even though he was the one that started it. And fast forward 4, 5, 6 months, one of them's no longer really involved. And so it's really hard to give a blanket statement. But just anticipate things going wrong, even if you love the person. And so having those conversations early, bringing in mentorship, seeking out outside resources.
Yeah, no, I that too, like, when you're talking about working with, others, mentors, but also other professionals, like an accountant, well, specifically a CPA, and also a lawyer. Make sure you work with a suitable lawyer that,
Mm.
well, there's different, like, in lawyers for different aspects of your business, right? And make sure you're working with the right one that's focused on what your needs are at the time of, you know, where you are in the business like life cycle. So if you're forming that agreement between you and your co-founders, make sure that you're working with the proper lawyer that's going to have provisions in there that explicitly say what happens if someone decides to leave or they're not contributing in the way that they agreed to. So you can claw back some of, like, the equity when it makes sense. or other terms like that. And yeah, there's a number of other things, but you touch on
For
something that
sure.
I think is really important too, finding those mentors. You're a mentor. How do you recommend people seek out mentors and make that initial connection? And also, again, feel out that relationship and build on that in an authentic way.
Here's something interesting about mentorship is it's such a scale, right? Like there is everything from I'm going to meet with you. Yes, I believe that's the book. Founder Pocket Guide. Yes, that's the one. Um, it's super short. So you could read it in like an hour. Um, uh, I just lost my train of thought. I'm pregnant. I'm sorry. I'm going to blame it on that. You were saying, oh, mentorship. It's a scale, right? Okay, so it is a scale from anything from like a one-off 30-minute conversation because I really want to learn from you, Kristin, to hey, I'd really love to meet more consistently. And so mentorship, it's a funny word because of that, I think, and because expectations can always be misaligned. To answer your question, how to find mentors, which is kind of related to Tim's question in the chat, which I will also get to, is how do you find people? And I'm going to tell you, you know the answer to this. In your gut, you know what you need to do, right? You know that you just need to go down some rabbit holes and like do some seeking out, do some research, reach out to current people you know, like, hey, Gary, I'm looking for someone with expertise in commercial real estate. Do you know of anyone, right? That's literally Gary's job. That's literally my job is to find those people. Um, so you know the answer to this. It's just doing it. The hardest thing to do is to do it, right? At Hub 101, we have a phrase called start something. Just start something. Just do it. You're going to fall on your face a couple times. You're going to say the wrong thing. You're going to get ghosted. All of that sucks. 100% validated feelings that sucks, but you know the answer. So, in terms of finding mentorship, it's really seeking out. It's kind of just like, this is the person I want to find, and I'm not going to stop until I find them because it's really important to what I want to do. Same thing with Angels. So, Santa Barbara Angels, I can speak on behalf of them. There's I know angel groups work like angel groups for you who aren't familiar, um, are actually sorry. Let me pause real quick because I don't think I closed the loop on that mentorship one, and I don't want that to come across like disingenuous. There's networking events you can go to. There's Gary's VIP lunch. There's co-working spaces like Hub 101. A lot of this kind of just happens organically. Some of it you can actively seek these people out, but the question usually isn't like, I'm looking for a mentor. Can you be my mentor? It's more, this is the information I'm seeking. This is the knowledge I'm seeking. This is the skill I'm seeking. Can you provide me some direction? And then if we jive, we might keep talking, right? I mean, we might keep meeting. If I feel like I can continue to help you, I'm going to offer to continue to help you. If I feel like I've reached the end of that relationship, I'm going to tell you and say, hey, I think we've tapped out. But I'd love to connect you with my colleague, such and such, who I think can take this further. So also really kind of thinking about that quote unquote ask. Sometimes it is, hey, I just need direction. And that's usually where those conversations start if you don't know the person. Um, but I will say that you know the answer, right? You know how to find these people. It's just putting yourself in the position to get uncomfortable with rejection because that might happen. And that's a really shitty feeling. Can I say that?
Yeah, don't
Okay.
worry. I cuss more than most
I should have
people
asked that
are
first.
comfortable with, but yes, it's
Okay.
okay. I see you understand tact. I'm still working on it. But yeah, I that is amazing. Yeah, Dr. Paxmer on Twitch is saying banned. Um, but yeah, like what you're saying is so important, and it's something that everyone needs to become comfortable with, even when it's discomforting, right? Just okay with pushing through that because you need to be vulnerable, you need to be willing to be rejected. And the beauty of this is a lot of times when you reach out to a potential person for help as a mentor, you're not going to hear back from them because they're often busy, right? And so you don't need to take that as a rejection. And like, I'd like to hear your advice. If you don't hear back from someone that you're reaching out
Ping
to,
me again. Ping me again, please.
exactly. Okay.
Please.
But where is the balance of being obnoxious and having no patience versus showing that you have some respect and you're giving people enough space to get to it when they can? And in that ping, that follow-up ping, do you have any recommendations for what someone could add to the message instead of just being like, "Hey, I want your help still, I want your help still." Like, is there something else they can do to like demonstrate their character or the effort they're putting in that makes you more likely to be excited to help someone?
So I'm only one data point, right? But honestly, the answer for me is if you ping me again, I'll be like, oh shoot, sorry, let me respond right now. Um, the reality is that my job is a connector, is a community builder, much like Gary, your job too. I'm sure your inbox at times feels really overwhelming. Mine does too. And so if, for example, if someone's coming to mind, her name's Camille. I met her back in May. She was working on a startup idea early May, and she's like, "Hey, can we schedule time?" I was like, "Yes, I'll send you my email. In my email signature is a calendar to book time with me. You don't have to ask; just book time whenever. People know that it's in my email signature for a reason." Um, and it took me a while to respond to her first email, so she pinged me again. I was like, "Oh my gosh, here's I'm so sorry. Like, here's my calendar link. Like, let's put some time in." The easiest thing for me is calendar time. I am more likely, we're most likely going to connect if you can get time in my calendar. If we're just going email to email, that thing is probably going to get buried at some point. So that's why I have the calendar link in my signature, is because I want you to put time in my calendar. I would love to talk to you, to learn what you're working on, to figure out how I can help. So in terms of techniques in the follow up, I've had people follow up 2 times, 3 times, and usually I respond by then. And if not, and you, okay, so, and then I'll be candid. I tell entrepreneurs all the time, I'm kind and candid. Not nice. I mean, I am not a nice person, but I don't, it's not like pleasantry, not like telling you want to hear, not like appeasing you, but deeply rooted in empathy and respect for you is where my kindness comes from and where my directness comes from. I'll tell you if I can't help. I don't have the bandwidth for this right now. Here's some other resources you can check out, right? Like, I'll be candid. Um, but yeah, if you could get some stuff in my calendar, we can meet like face to face or Zoom to Zoom, that's going to be your best bet.
This is amazing, amazing insights. People are enjoying it.
Um,
Let's jump to Tim
shout,
though. Yeah.
yeah, Tim. Okay, so there is a
Wait, hang on. Wait,
oh
sorry, Kristen. For everyone, this is the first time Kristen's been one of our wonderful guest mentors. So, the premise here, so everyone knows what the question is, I'll read it or you can read it.
oh sorry.
I'll read it. So Tim
Okay.
asks, how do you find, approach, and otherwise attract relevant angel investors if you don't come from an Ivy League or have pedigree? All right, go for it.
Okay. So kindly and candidly, you know the answer to this, right? So okay, and let me now. That's my like quippy response. Let me give you some actual tactical stuff. There's an organization called ACA, the Angel Capital Association. I'm assuming you're early stage. I'm assuming you're pre-seed-ish. So we're talking friends, family round, high net worth individuals, angel investors, right? So ACA is an organization that most angel syndicates are part of. I always suggest angel syndicates because it's a group of angel investors. You're not hitting 1 to 1. You're hitting 1 to 30, 1 to 200, depending on the size of the group. Angel syndicates, the value of them is sometimes they have a fund, sometimes they don't. Santa Barbara Angels does not, but they can share the due diligence. So like if you're a fintech coming through, if you're a industrials company coming through, we can put those experts on the DD to kind of vet the deal to see if it's worth bringing into the rest of the group. I think angel groups are great. There's tons of them across the US. They each have their own thesis. ACA lists them. List the ones that are members of ACA. There's some that are not part of ACA. You have to pay like a membership fee, but that would be my first uh, piece of advice would be to find the groups, and then most of them will have a rule like this: if you can get someone from SBAA to intro you, then you're in our funnel. You're in our deal flow funnel. Whether you get an invitation to present is something different, and every group works differently. So we are constantly vetting deals for our monthly meetings. We meet once a month. We have 2 companies present at that meeting. So we're constantly screening deal flow for our meetings. But if you can get an introduction through an SBA member, then you're in our deal flow. So if I tell you that, what are you going to do? You're going to go to our website. You're going to see who our members are. You're going to find their LinkedIns, and you're going to hit them all and say, hey, this is me. Or if you know the person who runs deal flow like me, Kristin, you can, contact me. But even then it holds more weight if you can get a member do that introduction. And I promise you, in a group of even 30, there's one nice investor who will take a conversation with you, respond to your LinkedIn and say, hey, this sounds interesting. Let me send this to Kristin. Kristin, can you get this started going in our deal flow? This might be an interesting one to vet. And then I can start the process and, assemble DD teams and et cetera. So, if you don't know of anyone, if you don't come from networks, which is absolutely fair, not all of us come from those types of networks like Ivy Leagues or you know generational wealth or whatever, what have you. So that would be some of my advice. And then here you could also, what I tell entrepreneurs is create an A, B, and C list. So A's are the investors that you think are going to be really great fits based off of who they invest in, what they invest in, what they're passionate about, where they're located, whatever, for whatever reason, those are your A's. Let's start with your C's. Let's start reaching out to the C's on LinkedIn. Let's practice our messaging. Let's practice our cold outreach. Let's practice, are we sending a one pager? Are we sending a full pitch deck? Are we sending just a teaser? Like, what are we doing? Practice with your C's. And then by the time you get to your A's, you feel a bit more confident in what that response might be. Any follow-ups to that, Tim, or anyone else?
Yeah, Tim had a follow-up in the chat. First, he said truth to everything that you're sharing about, finding people and meeting with people and everything else you shared. The follow-up was, how do you keep yourself from being taken advantage of, given the contrast in financial power and risk? Very important.
Oh, how would I answer that? I don't know if there's a okay, legal counsel is always great. Gary mentioned that in the beginning. Legal counsel to review any term sheets at all, if you're getting to terms. My what I want to say is like data. The more data we have, the more patterns we can recognize, right? So the more investors that you talk to, you will start to understand who feels slimy and who doesn't. What questions feel gross and what questions feel genuine. What suggestions feel gross, what suggestions feel genuine. But if you're only talking to 1, 2, 3, 4, 5 investors, you're not gonna have a lay of the land, right? You can come to people like me, people like Gary, and ask, like, hey, Kristin, this investor said, they really want this term. What do you think? Or you could, legal counsel's the best for that. I want that on record 100%. But you can come to your mentors for sure. But the more you talk to, the more you learn. How can you protect yourself? There's, it just ended, but what's his face? Brad Feld does a venture deals course like twice a year. I think it's called Venture Deals. It's free. They've changed the model. It's really annoying. They like close it. It's only open for like 14 weeks and you have to finish it. And if you don't, then it like disappears and you lose access. It's kind of silly now, but I'm not sure why they do that. But they also have a book called Venture Deals. Be smarter than your startup attorney, something like that. It's really heady, but there's some good stuff in there. In terms of like actual deals, which deals matter, which ones are worth fighting for, what terms matter, which terms are worth fighting for, which terms, what liquidation preferences are fair, things like that. But in terms of, if you're talking about character, I'd ask you the same question. How do you ensure you have a good friend? It's like getting to know them, right? It's like meeting them over time. It's meeting multiple people and saying, that person's not really a good friend, but that one is for these reasons. And so I think data plays in your favor. Having more data points plays in your favor. I can only speak for Santa Barbara Angel Alliance. There's a vetting process to become a member, and our members are fantastic. Some of them are like intense, that's for sure. Some of them are, I would call them, not soft, but kinder. I don't even know if kinder is the right word. Anyways, there's a spectrum of like personality traits, right? But none of them are like gross people, in terms of taking advantage of entrepreneurs. We're also a small group. We're 35 members. We can kind of manage that. If you talk about Tech Coast Angels at over 200, I'm not sure how they manage that process. So I think it's also kind of understanding the group dynamics if you're going after angel groups. Does that answer your question, Tim? That's a tough question.
Yeah, I thought, again, amazing insights. So Tim and anyone else that is listening in, if you got follow-up questions, new questions, again, use the text chat, post them. I will relay them to Kristin. And those of you watching with us over here in Start Model, we're hosting this. Feel free to raise your hand if you want to come on stage, or I see some of you posting questions in the chat too. So we can do either way. So keep it up. This is wonderful so far. Melly had a question. Melly asks, is it a good idea to join more than one accelerator? My team got accepted into one, but we are thinking about applying to Y Combinator again as well. It isn't all about money, but rather just connects, but the money would help, of course.
So I love the accelerator model. I love it. I think it's fantastic. And also, They are shitty accelerators. So my answer to you is, if you're giving up equity for every single accelerator, I would pause, because you're diluting yourself quickly at terms that are more favorable to the accelerator, right? So if these are like free accelerators, like they're no cost, that you get co-working space, you get mentorship, you get program curriculum, you get a variety of things, go for it, right? Like, what I mean, if you have the bandwidth to pour into it. I think it also depends on the accelerator. So some are really time intensive. You need to move to that location. You need to put your head down for 3 months and not do anything else, right? So I think it really depends on where you're at in your startup life cycle. And again, there's really crappy accelerators. My biggest piece of advice when you're considering an accelerator, even one like YC, is talk to some portfolio companies. Like, tell the program manager, for my accelerator program, I don't even wait for them to ask. If people are interested in joining, I connect them with alumni. Our alumni are on our website. You can reach out to them. I want you to talk candidly with amongst yourselves, not with me in the room, about their experience, because I'm so confident in our program. Every program should feel like that. So if you talk to someone, portfolio companies, and say, hey, program manager, I'd love to talk to a couple entrepreneurs that have gone through your program. They should want to connect you, right? If they really want you to be part of this program, they're going to be doing what needs to be done to get you to come into program. If they don't respond to that message, I'd say that's a yellow flag right off the bat. If they're not responding to your request for due diligence, which you have every right to do, that would feel weird to me. You can also go straight to the founders, straight to the portfolio companies. Usually they have logos on their websites, right? You can reach out to them on LinkedIn. So I would always say talk to portfolio companies more than one, right? Data plays in our favor. We want more data points. Don't just talk to one. Don't just talk to two. Talk to as many as you can to understand what worked well. What did you like? What didn't you like? Did you raise money? Was that your goal? Did you find a co-founder? Was that your goal? The people who have experienced this in that particular program are going to be your best source of truth.
Yeah, it's so important to get those extra opinions, and those extra opinions extend to everything that you are trying to do. And that also in your like personal life. Like my parents, for example, they have a plumbing issue in their house and they spoke to just one plumber. And they're like, yeah, well, we trust him. We've worked with him before. I'm like, well, even in that case, it's still always in your best interest to at least get one other opinion. Like, just see what else, someone else's perspective is. You don't know, like maybe like another person's more up to date with like, advancements in plumbing technology that, the plumber you've used is kind of like more laid back and just kind of does his thing, right? So, with a lawyer, with a co-founder, with everything, right? Get different perspectives, see how they think about these things, and really like lean into the methodology. Ask them to explain their methodology behind what they are going to do for you, which I think applies to everything too. Like the incubator accelerators, like, what's the methodology behind how they run it, how they
Mm-hmm.
put you through like the educational portions, or how they connect you with different people. So this is
And who's the
wonderful.
team? So I'm a program manager that runs a program, right? Who you actually going to be working with day to day? Who's the one that you're going to be interacting with, or ones that you're going to be interacting with? Because some of these programs, like the one we did in London, we had a whole scouting team. But once you're in program, you're not really interacting that much with the scouting team, right? So really understanding the dynamics of the team. Oh, I see Melly just put in a follow up there.
Yeah, so Melly added, the one we got accepted to is based in the Bay. And if we get into YC, it would also be in the Bay. We already have a few friends who are members of YC, and our first VC investor already gave us interviews with YC companies in their investment group. But yeah, just working with the one we got accepted with has been good. And they gave us a ton of advice on how investors pattern match and how to go to market.
First of all, congratulations. I'm sorry I didn't start there. Congrats on getting to accelerators. It's always a competitive process, so that's awesome. It's traction of a different sort, but it's still traction, and that's what investors want to see. How do I want to answer this? Why is YC the end goal for a lot of us? Is it and let me also emphasize that I understand the weight that YC holds. It's an incredible reputation. It holds weight with investors. but it only holds so much weight because why? What do investors want to see? Do they want to see that you are a YC portfolio company, or do they want to see that you have X amount of money in revenue and this many customers and this many letters of intent? So what vehicle you need to get traction should be the question. What is the vehicle? What is the accelerator? What is the incubator? What is the mentorship? What is the whatever it is to get you traction? I think that's the core question that we should be asking. If you have a great experience right now with your current accelerator, let's see everything we can get from them, right? Like, let's go back to the program manager and say, hey, we want to have some conversations with these types of industry partners. Can you point us in the right direction? Or, hey, we have some questions about this part of our business model. Like, really take advantage of those resources if it's already working well. I don't, in terms of participating in 2 accelerators at the same time, I don't know if many allow that. I mean, they might, but they all want your time. So I don't know how, maybe you could do one founder in one and one founder in another. I'm not sure if they overlap. But yeah, I think the question we should be asking is if the end goal is traction, because there's another question about 11 customers that someone asked in the chat. And is that enough to get investment? If the end goal is traction, because that's what investors want to see, we're a chicken and the egg situation, or we need traction to get investors, but we need investment to get traction oftentimes. What is the vehicle, the mechanism to help us get there? And if you're already getting something of value, then I would say let's extract as much value from that as we can. I don't know, Melly, if that answers your question. If you have any follow-ups, put them in the chat.
Again, amazing insights and advice. Okay, while we wait for Melly to follow up, if there is, Boyne, how you doing? Boyne asks, I'm looking to partner with people to market Visuino to the industrial automation industry, as well as offering it for whitelisting to companies manufacturing industrial automation equipment. Do you happen to know people in that area that may be interested in partnering? And what advice, I'm going to add this, what advice do you have for seeking those people out or finding them?
So off the top of my head, the only one that's coming to mind is Hive. Have you gotten plugged in with Hive yet? Oh, sorry. I don't know why. I'm waiting for a response. Okay. Hive is a local, what would they call themselves? I don't even know if it's an incubator, but they are focusing on automation in the industry, in commercial spaces. And they work out of FathomWorks. It's a lot of the FathomWorks team, although it's funded through a different mechanism than FathomWorks. Yeah, thank you for putting that in the chat. So I would start hanging out there. They just opened up open office hours every Tuesday and Thursday. You can just hang out there. Free resource. Just go hang out, go meet people, go see who you can meet in the rooms, go start planting that seed. Hey, I'm looking for this type of person. Boy, and I will look in my LinkedIn after this to see who comes up for that in particular. But no one is coming to mind in terms of how might I approach that conversation. I think it depends on who you want to talk to. I find that and I'm sure you've heard this before too, asking for feedback. Hey, this is what I want to do. Do you have any ideas? Hey, this is what I want to do. Do you have any feedback? This is pricing that I'm thinking about, or this is a customer I'm thinking about targeting, or this is a go-to-market strategy I'm thinking of. Asking those types of questions is usually people like to give their advice, hence why I'm here, right? And why Gary's able to get people to do these sessions all the time is we like to give our advice, we like to help. So I would come from that perspective, seeking, and then seeing where that conversation goes. Does that answer your question, Boyan? But definitely start hanging out at Hive.
Yeah, I post some links, extra ones in there too, for people that are in the Los Angeles, Ventura, Santa Barbara area, because it's based in the main FathomWorks campus is on Port Hueneme Naval Base, and it's a very robust makerspace with all kinds of very deep tech, advanced like testing facilities in addition to manufacturing type stuff. And then they also have a smaller campus that's at the Camarillo Airport, where they've been doing a lot of more kind of co-working and kind of networking events and pitch little events that we just went to, which was
and
wonderful.
they actually have a pitch to investor event. Yeah, they do that too. A pitch to investor event once I'm not sure what their cadence is, but definitely get involved with them. Local to Ventura County, which I'm not sure what the percentage split is here, but
Yeah, it is a good mix. Okay, so let me see here. Let me see. Oh, okay, so Dr. Paxmore asked, I have 11 people who want to buy a lifetime membership to my game cafe, which doesn't exist yet. Can I get an investor? So I know Dr. Paxmore is a little bit kind of being like a little bit sarcastic, but also kind
oh,
of
is he
curious
okay?
too
Okay.
about the process. But yeah, I am curious, like, as a common question, right? Like, and this came up yesterday with like Baxter, right? Like, when is it too soon to start seeking out investors for capital versus seeking them out as mentors, like you've been talking about? And then in relation to like, like Dr. Paxmore's project venture that they're working on, they are working on this, and they do have 11 people who through their early validation test, essentially like a fake door test, they have gotten 11 people who have tried to get a lifetime membership. So yeah, there's a little more context.
Awesome. And first, congratulations. You have traction, right? 11 is more than zero. So that's amazing. Um, the answer to this question is framed very binary, right? Can I get an investor? Yes, no. My response would be sure. What type of investor do you want, though? Right? Like you could probably put this on a crowdfunding platform or what is it, a Kickstarter or something like that, and get some backing. Um, so I think my answer to you would be, what type of investment are you looking for? Are you looking for investment matched with mentorship, or excuse me, paired with mentorship? Let me tell you a little bit more about what I'm seeing right now at Santa Barbara Angels in particular. Santa Barbara Angels has invested over, oh gosh, I should know this statistic. They've been around for 10 years. I think over $20 million in 80-ish companies. I still got to be more than that now. So again, 35 people, it's pretty a big amount for just 35 people. What I'm seeing currently is you can get into our deal flow pre-revenue, 100%, right? Like if you get that connection, like I mentioned, if someone's bringing you into the group saying, actually, I have one right now sitting in my inbox I need to get to, pre-revenue company brought in by one of the members named Bob. And Bob's like, this one sounds really interesting. Let's form a DD team. Okay. Now, where does that end in our funnel, right? Does it get an invitation to present? Maybe, maybe not. But we never just say no. It's always no with feedback. If we do say no, these are the things that we would want to see. Please keep us updated on your progress, right? So we're very intentional and specific about what we would want to see for you to come back. We're also very intentional about saying, please put us on your investor comms communications, because we want to stay updated on any progress. And we do share it with the group. We use Slack. Every deal has a Slack channel. Anyways, so I am seeing pre-revenue, but if you think about how the process works, especially angel groups, which is what a lot of my expertise comes from, we're screening you against who? Other companies. We're consistently screening a group of companies. So if you're up against other pre-revenue companies and you're the best founder, you're the most interesting market, you're the most interesting product, you have a really strong team, whatever that might be, you have a really strong champion within SBAA, that's going to weigh a bit more than the other pre-revenue companies, right? If you're going up against revenue generating companies, then you might not be as strong of a candidate that month. So this is again why I say keep investors up to date, man. Like if I say no, you're not a fit in April, but then you come back to us in August and you say, hey, we have a little bit more traction, we'll put you right back in the deal flow, right? And we're screening you again against those other companies. So again, this is one data point. Please, I want to emphasize that, but other angel groups I know do work very similarly. So my answer is yes, you can get an investor. I'm sure you can find someone who's passionate about the space that you're in. How it works at Santa Barbara Angels again is sometimes there's someone who really cares about the founder who's like, hey, we're going to say no to this company. We really like the founding team. Is anyone willing to raise their hand to mentor this company? And sometimes someone will stand up and say, yes, I really like this company. I really like this founder. I'd love to work with them. Another one sitting in my inbox since yesterday, or just came in my inbox yesterday, is one of those. They came to us about, I think, July of last year. So almost about a year. They were too early. We screened them. They were too early. We said no. One of our investors stuck with them and has kind of been guiding them. And they're right back in our deal flow and a pretty strong candidate for our next monthly meeting. So, Dr. Paxton, or Paxmore, excuse me, does that answer your question?
I'm sure we'll get some more follow-ups from him. In the meantime, oh
And
yeah, yeah,
I find it, oh, go on.
no, I was gonna say, yeah, doctor just said, yeah, great answer. So that's a huge glowing
Yeah, I don't like
compliment from them.
binary because the
Yeah.
world doesn't work that way, right? Like it is so much more nuanced than that. And so anytime you find yourself asking a binary question, even in customer discovery, let's start to like really catch ourselves, which is what am I really trying to ask here? And how can I extract more information from this question? So like what type of investor might I get with 11 customers and where might I need to find that investor? Is that more of a crowdfunding model versus I have 1 million in revenue? What type of investor do I want to attract and where might I find those? So there's always nuance.
Absolutely. And yeah, this kind of mirrors something else that people that participate in this hear every time. Context. Context is the key to everything. Take the time to establish the correct context, operate in the correct context. And that includes like, yeah, like seeking out matches for partners, investors, customers, whatever. And you touched on something else that's really interesting before we move on to the next question.
Tim?
Yeah, the idea too of oh my God, my brain just blanked because I saw like 40 different things.
Um,
But oh my gosh. Well, we'll come back to it when it comes into my
okay.
brain. But yeah, it
What
was
was I
something
talking
really
about?
important.
Angel investors, deal flow.
Uh,
Oh, coming back,
oh, yeah,
keeping
yeah.
us updated.
Yeah, keeping you updated. Like the way you do that too, right? Like it kind of lends itself to again demonstrating your character as a founder, as a leader, and
Mm-hmm.
how you're consistently doing things and not waiting for others to do things for you. And I think that's so invaluable too in again like the follow-ups and what you're doing. Okay, so
Okay, if I may, real quick on that point, investor communications is by far one of the most underrated um, pieces of comms that you have at your disposal. So let me give you an example. Investor comms is the communication that you give to your investors. Yes, some startups are so good at this. Other startups, it is so difficult to get any sort of communication from them that investors in our Slack channels are saying, I would never invest in this founder again because it has been so hard to just get a damn update. Whereas others, we've said no to, they've continued to send us monthly updates, monthly, which is crazy. Not many entrepreneurs do monthly. They're right back in our deal flow because the investors are so impressed with they are clearly progressing month over month, but B, they're so consistent in their comms. So you never know, like, do not ever treat a rejection from an angel or an angel group as like the de facto data point, right? Like nothing is a monolith. Everything is variable. There's time that's a variable. There's humans that are a variable. There's all sorts of things. And so you never know what might resonate with one investor. In this case, it was really consistent investor comms. So if that's also useful, keep your investors updated. Even if they said no, potential investors, put them on some sort of a list, keep them updated.
absolutely. Okay, so Tim asks, in SoCal, what kind of events do you strongly suggest a busy founder take time out to attend? And which ones do you roll your eyes at? Are pay to win co-working spaces like Soho House worth it for the network? This is right up your
Ooh.
alley.
Oh, okay. So which ones do I roll my eyes at? I the one that comes to mind was LA Tech Week, but only because it was so huge and hard to figure out what to do and where to go to, and it was so like staccato and it was just kind of odd. But that said, there were some really awesome gems within LA Tech Week, right? Like some really cool events within LA Tech Week. So I think the ones that I kind of not roll my eyes at, but the ones that I like pause myself at are the ones that seem kind of so massive that they're just trying to, it's like a numbers game. They just want a certain number of events under them. They just want a certain number of attendees to come versus quality. But then even LA Tech Week example, there were some really cool events in there that were focused on quality, that were living in the world of LA Tech Week, which cared about quantity. You get what I'm saying? So, and then I don't know if I would know the answer to that without going to them. So I know that you're a busy founder. How are you going to spend your time? Um, I want to say try it and see what you think of it, but again, that's only one data point, right? So, um, perhaps my approach would be: do you know of other founders who've attended? Do you know of any? Could you ask a group like this, hey, I'm thinking about going to this coffee co-working event. Have any of you been to it? Do you rate it? Whatever. So maybe seeking other opinions on these types of events. Um, and it also depends on what you're looking for. I feel like these events are not usually great for fundraising because does an investor want to go get swarmed by 30 startups at a networking event? Perhaps not, right? So I think it depends on what you're looking for. What's your goal? Is it to meet other founders? Go, right? Let's meet other founders. Let's try to find a coworker, a co-founder. I'm looking for someone technical. I'm looking for someone with biz dev experience, marketing experience, sales, door-to-door sales experience, whatever that is. I think they could be great. But if you're looking for funding, I don't think that those types of events are always the most fruitful. I honestly think referrals are the best way to get into inboxes of funders.
And I also want to like add, like when you're trying to vet events, being someone that organizes a lot and gone to so many, look at who the organizers are, right? Like look at the organizers, look at what else they do in the community, then look at the pricing of the events, because a lot of events are priced in a way that is exploitative of founders who are often overeager or desperate to connect with investors or just see their dreams realized, right? So try to like look at how much they're charging and what's accessible to founders, because like the cheaper events that are showing like a respect for, you know, these people are putting their all into this in some fashion. And, you know, maybe they're working other jobs while they're doing this on the side, which is totally acceptable. And that's something I think is best. But the ones that are doing that are often the ones that are going to be putting on a better, higher quality event that's more about how can we uplift people and empower them and help them versus how can we make a lot of money off them. And then the other thing too is look at the event like details, like the format, how they're like, you know, approaching it, what the methodology seems to be in regards to supporting, you know, you making relationships or you learning something. And yeah, stuff like that. In the comments, you know, if someone puts on events, you'll see a lot of comments like, oh, I thought this was going to be informative, but it was an infomercial, right? That's a common one.
Mm.
Yeah. What do you think about the paid co-working spaces?
Um, I don't know if I fully understand the alternative. Do you mean free co-working?
Tim can add a little context, but uh I think more just like, is it worth paying to be at a
To go to
co-working
co-working?
space at all? Is kind of like
I
the
mean,
what I'm reading
I'm
into
going to be
this.
biased here because I run a co-working space. Right? I'm going to say, heck yeah, they're valuable, but they're valuable for a certain type of entrepreneur. I think it depends on who you are as a human. Um, how do you how do you operate? Are you the type where you can make progress and do what you need to do from a home office? Fantastic. Are you the type of person where you can do that within a Starbucks? Fantastic. I often find that entrepreneurship can be really hard at times, like this journey. And so, where can you find a group of entrepreneurs to talk to, commiserate with, celebrate wins with? Is it something like this? Fantastic. We've checked that box. We filled that cup. Now we can keep going. Are you the type of person that needs that through actual in person type of interaction at a co working space? Fantastic. So, I don't think co working is for everyone at all. Just like I don't think working in your home office is for everyone. Not binary, right? And are you finding a pattern in my responses? There's nuance. Um, so, what are my thoughts? I think they can be valuable. I think some of them are way overcharging for what you get. So, again, going back to Gary's point about, um, is it worth it? Is it worth the fee? You can get co-working at my co-working space for $50 a month. So, depending on, who you are and if you're a student. If you're not a student, our next one is like $99 a month versus, we work at like $4.99. So I think it really depends on what you can afford and what you're looking for. And you can not do co-working, but go to their networking events, which are free, right? Like anyone can come to our networking events. You don't have to be a coworker. So sometimes they can still provide a lot of valuable networking without having to be a member. So let me go back to that question. Did I answer that question?
Yeah, Tim said that was the correct context. And I just like, the last point is so important. I would personally shy away from any co-working space that doesn't do community events that are open to the community. because again, that seems to me like they're just a real estate play and they're only trying to make money off of this, perceived exclusivity, cool factor without recognizing the value of integrating with a larger community and how that gives the members opportunities to meet all types of different advisors, mentors, potential investors, co-founders, any number of people, right? So what you and CLU and Hub 101 do is incredible because it's community first, like by and large. So amazing spot. So definitely look for more of those. Love has a
Which is different
question.
than
Oh,
most
right.
WeWorks, right? A lot of WeWorks are not community focused; it's just office space. Same with there's Office Evolution around here. It's very like office based versus community. So again, I think it comes down to what you're looking for, and I think the entrepreneurial journey community is who you know is so important. Basic from a founder's perspective, excuse me, a funder's perspective, a co-founder's perspective, whatever that customer perspective. So I think community is something that we should all be focusing on and how to get plugged in and where.
Exactly. Okay, so Love has a question. Any suggestions for angel legal tech investor groups?
Ooh, okay. Thank you for asking that question because our angel group is agnostic. So we invest in legal tech. So my answer would be look at the group. So you, for example, if you go to our website, it says something along the lines of we invest in Southern Central California companies, although that's not like a hard rule. We have some like New York and Chicago portfolio companies um, across like all sorts of different industries. So if you are looking for specific, and we have legal tech experts. So this is the other cool thing about angel syndicates is if you were to come into our deal flow, we would put our relevant members on DD to say, hey, yeah, this actually has legs. Let's bring this into the rest of the group. We also have biotech experts. We have crypto experts, whatever that is, so that we can put the relevant people on the DD team to vet the company. A lot of angel groups work like that. So you are quote unquote relevant for a lot of angel groups. Now, if you're looking for legal tech for a specific reason, I don't know one off the top of my head, but I bet you could find some in ACA, the Angel Capital Association. If you go through the groups and you kind of look at, it's a bit manual. I think they used to have a filter where it's like, this is what they invest in. I don't know if they have that anymore. You might have to click on the websites of the angel groups and kind of read their theses and all of that. But the other thing about angel groups, again, it's so variable. Our members today in July 2026 are not the members that we had July 2025, July 2024, July 2023. We're constantly getting new members. I shouldn't say constantly, but we're consistently getting enough members. So right now we have a really heavy expertise in consumer products. So we're seeing a lot of CPG companies come through, which was totally opposite to like even 3 years ago when we were getting mostly SaaS. So even the makeup of the group can depend on what deal flow is really attractive to the group. Does that make sense? Does that answer your question?
It made sense to me. So hopefully, yeah,
Okay.
we'll see more from Love in a moment. We're coming up on time. We've got one, two, three more questions. Do you have a hard stop?
Not quite. No, not quite. It too. I think I have someone who's saying that they. I might be having someone come to the house at two,
Okay,
but
okay, all right,
they
cool.
may not.
All right,
So I
so
don't know.
yeah, all right. So just let me know when you hit, hard stop and
Okay.
we'll be done. Okay, but we've got a question from Clarence over here in Starmada. What about raising for international companies in their domestic markets, such as Singapore? What about accepting foreign funds to be wary of? How to show traction to investors such as yourself?
Okay. So, this is a tough one. So, are you okay? Let me find the question in the chat. What? So, you are in Singapore? Are you based in Singapore? What about? So you are based in Singapore, as I'm assuming. Yes. Maybe.
Maybe.
Okay. There is
Clarence.
okay. There's something called QSBS, tax exemption. Um, there are benefits to having being incorporated in Delaware, right, as a C corp. There are certain things that investors look for that inherently are not attached to companies that are not incorporated in the U.S. So we, in terms of SBA, we invested in a German company about a couple years ago, and it was a fail. They weren't able to write it off in the same way. It wasn't. There was a lot of tax complications with that failure in particular, with that investment A, and then with the failure B. And so we're super weary of non-US incorporated companies, it has to be like, no, I was gonna say it has to be really special, but even then we've had a really interesting one come through like earlier this year, and we screened them, we really liked them, and it was like, man, I don't think anyone's going to invest in this one because they were based in Germany or Austria, one of the two. So that, again, we're one data point, we're one group, right? So I can't answer that confidently across the board to speak for others. But there is definitely tax benefits, liquidation benefits for investors if you're incorporated in the US.
Yeah, so Clarence says, I'm in US, but they are based in Singapore. So the investors and the market that they want to enter.
I see. What about accepting foreign funds to be wary of? Okay, I don't feel like I don't think I'm confident enough to answer that question. I don't think I have enough experience with startups accepting foreign funds to tell you what to be wary of. The biggest thing I could probably tell you is to listen to your gut, and if something feels funky, then it probably is, and then to seek legal counsel. I'd even talk to other investors. Like, so let's talk to some US investors. How do they feel about other investors being on the cap table? Is it not a big deal at all? Again, theme here, let's get some data points. If Kristin can't answer the question, if you can't answer the question, let's get some more data so that we can feel confident in our answer. But I don't have enough experience with foreign funded startups to be able to answer that.
That's important. Lawyer up, lawyer up, lawyer up. And I love too the idea of talking to other investors to get a sense of what is good or bad for the cap table, because that's one of the main things that investors are paying attention to, amongst other things. But right, can you
Yeah, and
expand
there's
a little bit more
actually,
on like what the cap table, how that impacts the risk
so the
of
example
a
that
deal?
comes to mind actually is a company called Passion Footwear. They were built out of Slow, specifically Cal Poly. It's a physical product. It's a high heel that converts to a flat. Woman-founded team. They took on during COVID when they had to. They're doing really well right now. They're one of our portfolio companies too, but they took on some debt financing during COVID. Was it debt financing? I think it was debt financing during COVID because they just had to survive as a physical product when everyone was staying home, and their business model is convert your high heel to a flat on your, after your commute or whatever, or at work or when you're out. No one was going out, and that company, that entity was in Mexico. And then when it came time to get relief funding, I'm gonna butcher this, but there was something they did not qualify for that relief funding because they had a non-US entity on their cap table. So I would also look at what is an external entity somewhere else, not in the US. What might that do to any of the funding I'm eligible for, whether that be grants, relief funding, other debt financing. If you're going to do debt financing, I saw a question in the chat about that. So I think that's what I would do some more research into, is how might this impact other scenarios that might be in my future. I hope that one made sense.
Made sense. One of our lawyer mentors says foreign capital issues cut across CFI US, securities, tax, and export control law. So there's a lot of different things that can come up with that. So yeah, more reason to definitely seek
Oh,
legal
that's cute.
counsel.
Oh, what's his name?
No, this is William Love, part of our Discord,
Oh,
not
okay,
local.
okay.
Yeah,
Oh, it looks
yeah.
familiar with someone who just joined one of our incubator programs. I love SQ. Thank you so much for weighing in and also seeking experts like that. Please, I don't have the answers. Someone like that would have the answers. Thank you for providing that.
Awesome. Okay, so let's do John, and then we can jump back to Clarence real quick. It's unrelated. So John asks, what is a healthy amount of debt for a startup? How can you gauge whether the amount of debt your startup has taken is at a sustainable or unsustainable level?
Okay, so a question that we ask in our pre-screening questionnaire is, have you taken on any debt? Because debt gets paid first, right, before equity. And so investors want to know, and specifically in cases of liquidation, what does that look like for them? So my answer is it depends on the business model. So like if you're a CPG company, if you need inventory, debt makes sense for that type of business model, right? Um, we can keep debt for working capital, etc. So I'm curious what your business is. Are we like a SaaS company taking on debt? That's kind of weird. I also question the terms that you would get with that type of debt financing. Banks don't typically love SaaS because it's an unpredictable business model. And so you're usually having to secure that with uh, assets that you probably don't want to secure it with, like your home. And you're also probably, you probably have a high interest rate. So I'm curious what your business model is in order to answer that a bit better.
Yeah, feel free
But
to share, John. And we can go. We
if
can yeah. Oh, keep going.
and another piece of your question was how can you tell if there's too much debt? Can you comfortably make your payments if revenue dropped 20 to 30%? Can you still comfortably make those payments? The answer is no. Then I'm saying then you've taken on too much. So I think it's also comparing it to your revenue.
It's very important. Yeah, I think like also early stage entrepreneurs, founders, they don't they kind of lose sight of the importance of generating revenue like as soon as you launch. And we see a lot of articles in TechCrunch and other places and see a bunch of people online talking about, you just want to go get as many people as possible using it, and then you'll figure out how to make money, right? And you'll get investors. You don't have to worry about making money. So I'm curious about your take on this too. Like what are your thoughts and opinions on holding off on the business model and monetization in favor of users? And yeah, that's a good enough
Oh my gosh,
framing.
don't raise money is if you don't need to raise money, don't raise money, man. Don't maintain equity, especially. So there's two different worlds here. We have tech and innovation driven startups who are too risky oftentimes for a bank. They can't get debt financing. Equity is really their only shot. That world, I would say bootstrap as long as you can. Um, generate revenue. I mean, because again, if you think about it, you can maintain equity if you can prove traction. You can maintain more equity, right? So if you can generate revenue, if you can get customers, then investors don't have as much leverage on you. You hold the cards if you're able if you have a significant amount of traction. The other side of this are the small medium sized enterprises who most likely won't ever get equity because it's not a scalable business model for an investor, right? That's usually always debt financing, um, which is again, it's its own, growth curve. It's not hockey stick. It's more, linear. There's different types of entrepreneurship. One's not better than the other. There's different, and they also have different funding sources. So, yeah, I would say if you can bootstrap, if you can just make it work. I know that sounds ridiculous, and that's like the hardest thing to do, but it proves product market fit. If you can generate revenue, if you can generate traction, you are proving to investors that you have product market fit. You are a more compelling investment case than someone who's just like, this is my idea. Here's my pitch deck. I have some people who are interested, but no one has signed up yet or no one has purchased yet. So it's in your best interest to get revenue. Did I answer your question, Gary?
Yeah, John added, no, it's excuse me. I asked them like, if they said they're a consultant currently, and then I asked if this would be taking on debt for their consultancy business or a new one. John said, no, it's actually more when I've consulted at legacy companies where I'm wondering how much of an issue legacy debt is. For instance, my last consulting gig was at a large automaker in the UK. Oh, that's interesting. Cool. So yeah, I think it still plays into your answer. So it's more like, yeah, as a consultant trying to, yeah, like understand and
So
make
yeah,
sense of businesses. Yeah.
if you're asset light, bad uses of debt are to pay yourself because you don't have revenue. Okay, that not good use of debt financing. Good use of debt financing would be a line of credit uh, if you're about to get a good contract, a really big contract, you don't have enough people, you need to hire ahead of time for those people. That could be a good instance of a debt financing situation. So I think it depends on the situation. But if it's just to kind of like, pay yourself, pay rent, that's I question how you're going to pay that back.
Yeah, yeah.
And debt's scary. I mean, so is equity, but debt's scary because it's usually secured to something really important to you.
Exactly. Okay, so Tim asks, I met a couple in Texas who are connected to my industry, part of a local investment group for that industry, and were curious to have me send them my pitch deck. Is there a better, safer way to do that besides just cold sending a PDF?
Yeah, so thanks for the question because there's a lot of like logistical stuff too. Like, do I send a one page or do I send a deck with financials? Do I not send a deck with financials? All of those are fair and valid questions. Um, Before I answer that, there's been companies who've sent us like super interesting one pagers. I was like, please send me a deck. I want to know more. Um, Guess what was the most interesting part on that one pager? Traction, who their customers were. Was like, I want to learn more about this company. That traction is really compelling. This was a B2B restaurant SaaS business. Um, and they had some nice logos as their customers, right? So to go to this question, if you don't feel comfortable, so PDFs are pretty common still in this world. If you don't feel comfortable though, I see a lot of not DocuSigns. What is the is it DocuSign? Is it DocuSign? What is the pitch deck?
There's
Do you know what I'm talking about with that
yeah,
link?
I can't remember the name of it. It's maybe I was pitching the name. I know Alon's used it a few times
Oh, I
recently.
see these ones all the time too, and it's
Yeah.
bothering me that I can't remember it. I'll have to find it. But yes, there's a website. Is it DocuSign? Someone in the chat knows. I know someone knows this, and they're like, "Kristin, you're an idiot." Um, but you can actually, if you pay them, you can see data of like how long the viewer spends on each slide, like individual slide. How much time do they spend on the deck in general? So you can get some interesting data if on like their paid version. Their free version is just, yeah, you get a link. You can disable the link whenever you want. So if you want people to stop looking at it, you can do that. So you have more control. No, not Canva. I think it's DocuSign. I'll pull it up in a second. I'll open up another tab. Um, so if you don't feel comfortable, that's fair. PDFs still are very common, but if you don't feel comfortable doing that, then just use one of those like links that you can lock. Even something as simple as like a Google Drive link to the PDF that you can like secure access to, right? You can like grant different like permission settings. If that makes you feel better, you're welcome to do that. No, not pitch deck, but John, I appreciate you continuing to try. I
Yeah,
do. That's
we'll figure
genuine.
it out.
I
We'll
do
figure it out.
appreciate it. Um,
Yeah,
and going back to like the other things, financials are not super common in the first version of pitch deck. You do not have to share that. Um, it's more common for that to come up that after your pitch or during the screening.
yeah, absolutely. Okay, so Clarence has a question. How much AI usage in the business is too much when it comes to operational and workflows? That's a great question.
Um, do you think my answer is going to be binary? It depends. Okay, okay. Let's talk about some companies that have come through that are like super heavy AI. They're using AI in a lot of their. Actually, there was a company that came through a couple months ago who was so their business model was so reliant on AI that the conclusion from our group was we could probably build this in Claude Code over a weekend ourselves. So that was dead in the water, didn't make it through any further. So I think the question though was operations, right? Like if we're talking like productivity here, then that's a different conversation than like core like value proposition. That if your core value proposition can be replicated by anyone else building the same thing, investors are catching on pretty quickly. A lot of them are even are doing this stuff on the weekends to try to teach themselves to be better due diligence members to be able to better screen startups. So some of them are keeping their head in the sand and like don't know, but a lot of investors are trying this themselves to see what they could build. And also, and the other side of that is it's not really a good enough excuse anymore to not have a prototype. I don't know if excuse is the right word, but it is now expected that you can build something with the tools available to you to validate market demand and to get some market validation. I'm trying to find that question in the chat to make sure I answered it.
It was kind of up there.
Whose question was it?
Clarence.
Oh, clearance. How much AI usage in the business is too much when it comes? And to be honest, it's never. I've never heard the question like, hey, what percentage of your business is AI versus like actual humans? I've never heard the question asked like that. I have heard, hey, I went to your LinkedIn, Clarence, and I noticed that you have a full-time job. How much time are you actually allocating to this startup? Or, hey, Clarence, I looked at your co-founder and they say that she is doing this other job full-time. How much is she actually dedicated to this? So I've absolutely seen investors, and they do their own recon to try to figure out how serious you are about this business. It's okay to be working on something full time while you're working on this as a side hustle for sure. But just know you're going to get questions like that, and investors are going to look you up to try to put together the picture themselves.
Yeah. Hang on. Okay, so Tim had a follow-up one. Are there any operational, even legal corners that could be okay to cut that could be beneficial to broke founders trying to build traction? I know what the legal answer from you is
Oh
going to
my God.
be.
Who's Love ESQ? I'm not even going to try. Love ESQ is going to ream me if I even say anything. To be honest, I don't feel confident answering that question. Um, I the only the biggest hack, I guess, a tip hack, um, would be to, again, I kind of mentioned this, to put off raising funds as much as for as long as you can. If that means this needs to be a side hustle as you're getting product market validation, then that's what it needs to be. But the question is, what operational corners that could be okay to cut, that'd be beneficial to found. Okay, other hacks would be like using fractional roles. So like you can't afford, like if you need a fractional CTO or a fractional CFO or like fractional type of person versus giving them equity ownership as a co-founder, or versus, paying them as an employee or giving up other equity. So I think fractional roles could be like a quote unquote hack to getting work done without giving up equity or a lot of money. Other hacks for broke founders. But I don't want to touch the legal one, especially because we have like Love ESQ on the call. DocSend, thank you. That's it. John Paulson. It's DocSend. DocSend, thank you, is the website. Who asked that question? The Texas people? Tim.
Yeah, Tim.
DocSend. That is what you can use. That's very common. So you put your DocSend. It's a freemium model. I think free, you don't get insights, but you can send a link. You can turn whatever you want. I think if you pay them, you get insights like data insights, how long have people been on each slide, etc. You can even require an email address before the person views it. So like I have to type in sometimes my email address in order to even view the document.
Yes, that's the one. That's
Love
the one.
ESQ for the win. Thank you so much.
Okay. John Paulson asked another one, if okay. I've looked into MBAs in the past here in the UK, but am unsure as to what modules you would expect in a traditional MBA versus what you would expect in a modern MBA. I would assume such modules would include risk governance, especially post 9/11 in terms of business continuity planning, various finance or accounting modules, supply chain management, HR, etc. What would you say comprises a typical MBA, and what do you wish business schools would teach in the MBAs they offer today? That's an awesome question.
Okay, so first of all, you're in the UK. I want to know where in the UK you are. I lived in Greenwich for quite a few years. My husband's English. I can't remember if I mentioned that. Um, y'all have a big game coming up. I should say we. I'm English through him, right? I'm just kidding. Okay, my MBA, I did not get a general MBA because I always wanted an emphasis. I always wanted a more specialized, focused type of a degree. I actually chose Cal Lutheran in particular because they used to have an emphasis, they don't anymore, called enterprise innovation and entrepreneurship. I think I mentioned that, right? The entrepreneurship side, and then how do you do that within a large organization? At the time, I was more interested in corporate innovation because I was doing a lot of that in London, and it was fascinating. It was so much fun. Teaching insurance companies how to innovate is like, it's so much fun. So, and the entrepreneurship side is I fell even more in love with. But anyways, so personally, I would want an emphasis, not just a general MBA. And so, what's interesting to you? Is it marketing? If it's marketing, is their marketing curriculum the same that it was even 5 years ago? That would be a yellow flag for me. Have they innovated their courses? Do their courses sound like they're stuck in the 90s? or the 2000s, that would also kind of be a yellow flag. I would also think about what it is that you want to do. So like, for example, let's assume I want to get into, I don't know, venture capital. I don't. Let's just assume I do. And I was considering going to get my MBA. I would want to really scrutinize the finance classes and the finance side of things, operational side of things. I'd want to understand how, a business works under the hood, right? So I think my answer is never, never straightforward, is it? But I think it really depends. But I think you said, what do I wish business schools would teach? I wish there'd be more experiential learning. I wish that it wasn't just like, here's a course and take it. I wish there were more simulations at minimum. I wish there was more like, you don't have to search for an internship. Here one is. Go apply your learnings to this company. Less work on behalf of the student and more work on behalf of the university. Yes. So like more practical and experiential work. So I would look into so another reason why I chose Cal Lutheran is because it had Hub 101. And I was like, I know that model. I'm used to this. I did this in London. I want to get involved. And so that was actually one of my first emails to Mike, my boss. He's the executive director. I said, hey, I know this model. Here's my resume. I want to get involved. Don't know what that is, but I just got accepted into Cal Lutheran. And that kind of led to what it is now. So things like unique programs is what I would look for. Something like Hub 101. Hub 101 is very unique because it's community facing. A lot of schools have a co-working space for students or an incubator for students, but it breaks a lot of rules to be community facing. Like we don't really fit nicely into any Cal Lutheran box in terms of operational security, anything. And so it takes like a more forward thinking, innovative thinking university to do that. So I'd look for stuff like that. Competitions, what's available to me. We have a really unique grant program at Cal Lutheran that I would look for. How are you going to support me afterward? And guess what? Talk to alumni. Talk to alumni. Just like you talk to a portfolio company of the accelerator, talk to alumni of the university and the MBA program and say, hey, do you think this helped? Like what resources do they provide you? And we're not going to talk to one. We're not going to talk to two. We're going to talk to a handful so we can get data that we can trust. I feel like I should do like a wrap up of like Kristin's 5 themes. Get data.
I'm gonna say we're coming up on your time for sure, so we're gonna call it at that last question. But there is actually
Birmingham.
Yes, yeah, John's in Birmingham. But people are asking if it's okay if they connect with you, and
Please.
yeah, so I'll share your LinkedIn if that's cool.
Yeah, and here's my email. So there's a small caveat to that, which I'll tell you in a second. Kristin Bell at CalLutheran. Oh no, don't do that. Don't do that. Don't do that. Kristin Bell at callutheran.edu. That was a typo. Can I delete my message? Yes, I can. Okay. Caveat is I'm going on maternity leave at the end of the month. But I'll be back in December, early December. So if you can catch me there, I still have some time on my calendar for this month. So if you email me, I'll respond. Again, I have that in my signature for a reason, book time. And then if we can't connect, then December is when I will be back.
Fantastic.
Did I get all of them? Really?
Well, okay, one just came in. One last one. We'll do it real quick because I know I don't want to keep you too long. You got someone.
Oh, did everyone see Love ESQ's response though to that to the question about broke founders?
Oh, Love didn't add anything specific to that. The answer is going to be don't.
Here's a starting point.
Oh, that was for I think Clarence, or I think it was Clarence asking about international dealings.
Oh, okay.
Yeah, that was a follow-up
to
that. Yeah.
I wanna copy paste that myself.
Awesome.
Thank you for that.
Yeah, so here's the last one from Tim. Tim asks, okay, so I'm a Midwest millennial who moved west, but still retained the humility and shame of over-promoting yourself. That doesn't seem to be the vibe with the modern era, however. How important is it to keep all your personal social media accounts up to date, filled with content, etc., when it comes to seeking investments for a startup?
Okay. LinkedIn, yes. So even what I provide, I provide a bunch of information for all the companies that we screen to our due diligence teams, and then also in our final agenda for every monthly meeting. I will stalk you on LinkedIn. I will find you. I will put your LinkedIn in that email because the investors want it. So LinkedIn, yes. LinkedIn, please keep it up to date with your resume, what you're currently working on. The startup should be on there at minimum if you're seeking funds for it. The other ones, unless you're a consumer product, that's not a blanket statement though. I'm trying to think of an instance where like investors in particular come to seeking investments for a startup. I don't think they're looking at your TikTok and Instagram. Um, and even then, it's vanity. It's vanity metrics. So I wonder how much weight it truly holds. Unless it's your business is like influencer affiliate marketing is how you generate revenue. And so it's a really important metric to your business. But by and far, by and large, I'm dyslexic and I try to do these idioms all the time. By and large, um, it means traction is more compelling, traction like revenue, letters of intent, customers over a vanity metric like followers and content and stuff. But that it probably is important for your customers. So if you're a B2C business and you need that content for customers, for example, that's I mean it's inherently affecting your investment, right? If you can't generate customers because you don't really have a content strategy, you don't really have a marketing strategy, that's going to impact traction, which then impacts your investment. But I don't think the investors are on those platforms. Does that make sense?
Totally makes sense. And I love every answer that you've given because it's been, again, so rooted in establishing the correct context before figuring out what the answer should be or, even could be. And, even this one, right? Like there's so many people that I see early stage founders that rush to like try to build up a social media presence and everything. They spend so much money on it. And like again, you got to connect it to what stage you're at in your business life cycle, your product life cycle, right? Like do you even have a customer? Do you know who those customers are and what resonates with them and how to tell your story to them and make them interested in, connecting with you and following that social media funnel to your company website or wherever it is to make the purchase and engage and be a, client customer? It's like don't skip steps. Like start with, early stage marketing that is just, getting that first customer, first 10 customers and start learning and working towards what you said earlier, that product market fit. And yeah, to wrap up real quick, like with that in mind, with your marketing, like, background, what should be done first before you start to do like paid marketing?
And this actually should even be done before you seek investment. If we're so focused on how am I going to find my first 100 my first 10 investors, my first 5 investors, but we can't answer the question, how am I going to get my next 100 customers? And I don't just mean like social media. I'm going to go to a conference, but I mean like strategically, what are you going to do to get your next 100 customers? If we can't confidently answer that, if we don't confidently have the roadmap to get there, I think everything else should be on pause. Go to market strategy, another thing I'm obsessed with, is the strategic things that we are going to do to get customers, which then proves traction. So there's another question I didn't really get to is how do we prove traction to customers or to investors? It's going to depend on the business model, but um, but if we can't prove go to market, and also if that slide in your deck sucks, if it's not tied to your market size, if it's not tied to your financials, if it's not tied to your business model, all of the slides in your deck are connected. And I am so sad when I see entrepreneurs just treat them as like individual slides to just like check a box and they all need to make sense together. But that go to market slide is so underrated. Like we need to be focusing so heavily on how we're going to get customers. So that would be my biggest piece of advice is if I said, hey, by the end of summer, you need to have at minimum 10 more customers. What are the things that you're going to do? Activities? What are the channels you're going to be using? What's the messaging you're going to be experimenting with? How much rejection are you willing to get there? Because that's really another part of this, right? Is getting the no's and getting ghosted and etc. But I would say focus on the customers. That'd be my biggest piece of advice. Product market fit. If you can prove that to investors, you have a much more compelling case to be invested in.
I love it. You've been amazing with your time. You've been
Thanks.
incredibly eloquent. It definitely shows that you're an a very talented teacher at what you do.
Thank you.
So yeah, final thoughts, and then we're good to go if you have them. Seemed like you had a few you wanted to share.
I want to commend all of you. Entrepreneurship is so hard. I love that you're in this group. I love that you're plugged into this community with Gary and with each other. I think community and your network is truly so important. So please keep doing this, keep showing up. Even if you don't have anything to add, even if you have made very little progress, just keep showing up. I promise you it all adds up. It's like, have you heard the phrase, it's like laying a brick? Like I'm laying a brick and then I'll have the house. It's just like one more brick laid, all of these efforts. And then again, I'll emphasize, go get customers. If you're hitting a wall, really look at your product market fit. Really look at your assumptions that you're making. Are you assuming something to be true that actually we haven't really validated it to be true? So really put on that devil's advocate hat. If you're struggling to make progress, there's most likely a gap somewhere that we're overlooking. And I'm a resource.
Yes.
Please use me
Yes.
how you see fit. This is my job. I don't have to ask for a retainer. Please use me. I'd love to help.
We've got a lot of people chatting, just saying so, they're so happy for you to be here and thanking you. And yeah, yeah, absolutely. You're amazing. So with
Thank you.
that, thank you everyone for being so bold and brave, asking wonderful questions and being good listeners and following up. And yeah, again, Kristen, like you're wonderful. I hope to
Thank you
see
so
you like,
much.
yeah, more
Thanks
in
for
the
having
community.
me.
And yeah, thank you so much. All right, take care,
Of
everyone. Have a
course.
great day.
Bye, everyone.
Later.